It's fall of 2018. The stock market is at an all-time high. The big question here, should I sell my stock now or should I wait? If you're a long-term investor, in my opinion, you should wait. Better yet, think about buying some more good quality stocks here. I'm Suzanne Collins Ford, licensed investment advisor. I've been helping people to buy stocks for 35 years. I'm fourth generation Wall Street executive, grew up with talk of stock in my home. And I want to give you 3 reasons today why you should hold on to your good quality stock. The first reason is that it is the consensus of the analysts, the experts, that the stock market is still growing because the economic cycle has not peaked. Business is still growing, and as business grows, so does the stock market. All know that the economy goes up and down. It starts weak, then grows, then gets weak again, and everything starts all over again. The cycle normally lasts about 9 years. We need to understand the sectors of the economy to see this. A sector is a group of companies in the same business, and usually stocks in a sector move together, and sectors move in a certain order. The sectors are commodities, materials, industrial, manufacturing, consumer staples, consumer discretionary, technology, energy, finance, healthcare, and transportation. Commodities is the first sector to move in an economic cycle. Commodities are things like iron, oil, sand. They're the things that we need to make things from scratch. These are the first things we need in an economic expansion. The next sector of the economy to move is materials. We have sand first, but then we need the other ingredient, the chemical needed to make the bricks. The bricks are materials. We use these materials to make things to build our factories, to build infrastructure. Industrial is next. Industry makes the machines that make the machines. The industrial sector is big. It makes the things that change our world. Manufacturing comes after industrial. People are starting to buy more. Manufacturers are getting orders. The consumer steps in. He has finally become fully employed. A couple of wage increases, feeling confident. So he buys things that he's put off for a long time. A new car, a clothes washer, a new refrigerator. Expensive things that are supposed to last more than a year are durables or a consumer staple. Then, once the consumer has acquired what they need, they start to buy what they want. This is when the real fun starts. The consumer accounts for about 70% of the power of the economy. All business is dependent on the consumer. Once the consumer starts to spend, media, transportation, energy, technology, and finance continue to expand to meet the needs of the consumer. Here is the interesting thing. The consumer accounts for about half of the economic expansion. Once the consumer awakens, we still have halfway to go. We are right at the beginning of the consumer discretionary sector, and what that means is that people may have bought some new cars, but not houses. Art is still cheap. Luxury items are still cheap. Exotic vacations have not happened yet. Real wages, that is, wages after price increases, have not gone up. So, if we look at where we are on the cycle, it looks like we could easily have another 3 to 6 years of economic growth. Then, ideally, we sell at the peak. For the bulk of our portfolio, we need to wait for the consumer. The consumer needs to peak, and be at full spending mode before we sell. So this is the first reason to hold on to your good quality stocks. The consumer isn't done. Economic growth is still happening. I'm Suzanne Collins Ford with Bowood Partners. Thanks for listening today. Please like and subscribe, and tune in for our other videos on why you should hold on to your good quality stock. Have a great day.